Cryptotader is proudly brought to you by Element, a full-service investment bank for the digital token capital markets.
Another exchange hack, another red week on the markets. This time it was Binance who claimed they weren't hacked, but a third-party robot was. The Neuner network goes down for 2 hours. PayPal files for a cryptocurrency patent. The SEC flexes its muscle by issuing a series of warnings and subpoenas. We find out whether TZERO did or didn't get a subpoena from the SEC. Another down week on the markets, and we meet again on CNBC Africa's Cryptotader. This week, we're in our studio while the who's who of crypto are gathered in Israel for the Tel Aviv FinTech Week. Now, I've been trying to track down Jed McCaleb. Jed McCaleb is the co-founder of Ripple and the founder of Stellar Lumens. And he's been avoiding me because he knows that I'm going to ask him which one is better, XRP or Stellar Lumens. Hopefully later in the show, the eToro team can track him down in Tel Aviv. In the meantime, I do have another guest from Tel Aviv on the line, and let me tell you, I've spent some time with this next guest, and she is super impressive. Shelly, tell us a little bit about who you are and what iAngels does.
I'm one of the founding partners of iAngels. iAngels is a VC platform that allows private investors from all over the world to invest in high-tech startups. Primarily in Israel, but now that we invest in blockchain, it's also in other places in the world. And today we currently have a community of about 20,000 investors across 45 countries and investing in over 100 startups over the last 4 years.
So Shelly, do you run a fund or are you a platform where any investor can join and participate in deals?
So it's actually a little bit of both. We're a hybrid fund and platform. The reason it's a hybrid because it's not an open platform where everybody can just go online and list their companies, but rather it's curated. We go through a due diligence process. We select only 1 or 2 investments each month. And then people can come and invest in the opportunities that we've already selected and we've already invested in from our fund. That's why it's a hybrid.
So, you have a team of people that go out and look for deals. Once they find deals, I'm assuming they bring them back and you give it to a team of researchers or analysts that give you the thumbprint of approval. You then post these deals on your platform. When people participate in these deals, do they participate on the same terms as you source the deals?
Yes, they do. In fact, this is the main added value. And not only do we open it up to our platform, but we also invest in these companies from our own funds. And so, in fact, our community is able to co-invest with us under the same exact terms.
Shelly, how do you evaluate which projects are viable and worth investing in?
Our whole approach is to look for opportunities within the areas that we are most interested in and meet kind of all the entrepreneurs and all the members of the ecosystem that are involved in these specific industries, and then look for the opportunities that make the most sense for us and for our investors.
Shelly, we had huge hype towards the end of last year in the cryptocurrency space, and then we had a correction. One could argue that the bubble popped and now we are closer to reality or a reality. As a fund with an increased fiduciary duty, what is your investment thesis after this correction?
So actually our thesis is very similar to what it was a couple of months ago. We believe that in terms of blockchain, we're still at a point where the blockchain itself, the technology isn't working well, meaning that if you want to actually build a business or build an application on the blockchain, it's not scalable, it's very costly, it has security issues. And so in terms of the cycle, we believe that we're still very much in the infrastructure stage. And we believe that investing in infrastructure technologies or companies and entrepreneurs that are trying to build technologies to improve the blockchain, then even across kind of market volatility and market corrections, these type of technologies will still be around and will have kind of the chance to weather these storms.
Okay, so Shelly, give me some examples of the stuff that you guys are actually investing in.
We invested in Nebulous. We intend on investing in Orbs, which is a very interesting Israeli blockchain that caters to B2C applications, helping B2C applications or real businesses build on top of the blockchain. We're also investing in a company called Firmo. Firmo created a platform and a language that enables developers to develop secure financial smart contracts on the blockchain, and it's completely blockchain agnostic. So basically, if it needs to build a secure smart contract on Ethereum or on Neo or on Cardano, that's completely possible. And for applications that you need kind of mission critical security, like financial contracts or derivatives, then this kind of solution is important. We're also investing in a company called Saga, which is building basically a stable token. One of the biggest issues today with cryptocurrency in terms of money exchange is that they're very volatile. So how can you kind of trust or put your value into something that can go up and down 20% or 30% each day when you actually want to use it kind of in the real world. So Saga is dealing with that also in a very interesting way with an algorithm that they created that analyzes the degree of trust within the network. And when the degree of trust in the network is lower, then the token is backed by real currencies, basically a basket of currencies, the SDR.
So how well has this thesis worked? Give me some of your investment results.
So I hope I'm not stepping on anybody's toes. So I had a few very nice investments. SingularityNet, which is a platform for artificial intelligence, a marketplace for artificial intelligence. Invested in QuantStamp recently and in Cash, QASH, which is the Japanese exchange.
Shelly, we're in a market now that's been moving sideways and maybe a little bit down. And in order for us to get this momentum back in the market, we're going to need money to come from the outside. Do you think outside money is coming into the market? And if you do, where is this money actually coming from?
So I think that a lot of people are talking about Wall Street coming into the market, and I'm aware of many kind of large investment banks that are working on creating an offering for their clients. I think that that this can be really huge, despite the fact that people are expecting it. I think that there is a significant buy wall waiting to come in. That's not coming in yet because there is still a lot of regulatory uncertainty, and the user experience is quite crappy still. So for an institutional investor, or even for a retail investor to come into this market and try to kind of wrap their head around some of these decentralized exchanges or applications or storage, these issues are preventing from mainstream to come in. But I think that as time goes by and some of this regulatory uncertainty gets alleviated, and institutional investors and Wall Street will come in, and at the same time the user experience will improve, I think that we're going to see another kind of leap in terms of the adoption.
We're going to cross live to the eToro team where they've got Jed McCaleb. Jed, I know you've been avoiding me, and I know why you're avoiding me, because I'm going to ask you which one is better, Stellar or Ripple. But before that, can you tell our viewers, those that don't know, what is Stellar?
Stellar, basically the idea of it is to be an internet level protocol for payments to link all the different financial institutions and payment networks together. So money moves much more like email than it does today. So the idea is that in a Stellar-enabled world, everything would be on a much more level, even playing field. So you can trade any kind of currency for any other.
And how does Stellar solve this problem?
Basically, you can hold any kind of currency in the network. So you can hold dollars or euros or shekels, and then you can. And there's a built-in order book inside the network where you can trade them. So if I'm in the US and I want to send money to Mexico, it can go from dollars directly to pesos right in the same network. And it's built on this blockchain technology idea, and it uses a different algorithm than things like Bitcoin uses called SCP, Stellar Consensus Protocol.
Okay, so I'm going to be a bit cynical here, but is this not exactly what SWIFT, the traditional banking system, is doing?
I think it's basically SWIFT could use what we're using. Well, I think we're sort of bigger than SWIFT because it connects not only banks but other institutions, right? So it connects banks and like smaller remittance companies, startups, all these things can be interconnected, right? So SWIFT could adopt this protocol. I think maybe even SWIFT itself would tell you that their protocol is pretty antiquated and needs an overhaul. So it's open source and open protocol that we've developed, so they could adopt it just as easy as someone else. So
give me an example of how a company, an individual, or a bank would use this system in the real world.
So anyone that wants to send money cross-border, if you want to send money from country A to country B, you basically would connect to the Stellar network, you follow the protocol, and then now you can send and receive money to anybody else that's also connected to the network. So that's what they would do. They would just connect, and now then they can send, for instance, if you're a bank in Europe, now you can send to somebody in the Philippines. It's a seamless system.
Okay, so what happens if I'm in Europe and I have euros and I want to send rupees to India? What happens?
Essentially, what happens is you have deposited money with your bank, right? So that they're holding your euros, and then the bank issues a euro token onto the Stellar network. That gets sent. There's somebody in the middle that wants to buy these euro tokens and then sell the tokenized rupees on the other side, which we call a market maker, and that could be either one of the financial institutions or some third party. And so essentially, the money goes from normal euros to euro tokens, to rupee tokens, to normal rupees on the other side. So there's some bank on the other side that gets the rupee tokens and credits whoever you're sending it to on that side.
How do the banks do this currently? And then how does Stellar actually improve on what the banks are currently doing?
Well, the current system's pretty antiquated, and essentially it's basically this series of corresponding banks. Like if you wanted to do that transaction today, you would basically have to go through the corresponding banking system where your money would have to go to New York. It'd have to first go to euros to dollars, go to New York, and then from dollars to rupees, and then back to this country, right? And then to India, right? So and it only works between banks. It's slow, and it's expensive. So it kind of Stellar improves on all those axes. Like the main thing that it does is it makes these things interoperable in the same way that the internet made email interoperable, right? So now you can send messages to anyone and you don't even really think about it, right? So it's a similar concept.
So Jed, Ripple is often criticized by the cryptocurrency community for being a for-profit centralized company. Is Stellar decentralized?
So I would argue that Stellar is more decentralized than Ripple. Basically, just the nature of the consensus algorithm allows you for more people to run validators, and you can show that, at the end of this year, we're not even going to be running validators. So just out there in the community and other businesses that are dependent on Stellar will be running all the validators. So in that sense, it'll just be completely decentralized.
So there you go, Brad Garlinghouse. Jed says that Stellar is faster, cheaper, and more decentralized than Ripple. Jed, I know that if Brad was here, he'd tell us that Stellar is just a concept, while Ripple already has clients and is integrating into any of the banks. How do you respond to that?
Sure, yeah. I mean, I don't know how many of those partnerships are real. I mean, a lot of large banks are doing pilots, and it's very easy to get proof of concepts. I would say, having tried to work with large banks over years, I know it's very, very hard, and going from proof of concept to actual production is a years-long process. And a lot of times it doesn't happen. So for us, we focus mainly on remittance companies and kind of smaller players in the ecosystem, because I think they'll just be the first to adopt. They're more tech forward. They're more innovative in general, and they have a stronger need, right? So it just makes sense to start there. So we're much more bottom up, I think we have probably like 10 remittance companies on the network now. We have a pipeline with another 70. This year is going to be pretty big for us. There's just a lot of people joining the network right now. So.
Yoni, you hosting Jed in Israel, you have some news about eToro and Stellar.
Well, I mean, the main news is we added Jed and Stellar on the eToro platform. We've seen awesome feedback from the community. We're seeing a growing global community in eToro trading Stellar, excited about Stellar. people doing exactly what you did here, comparing Stellar and Ripple, comparing Stellar and Ethereum, which is super interesting. And we're excited to have Stellar on the platform. And more than that, our entire journey into the blockchain was around tokenizing financial assets. So we've been trading, whether it's the South African rand, the euros, and the dollars before Bitcoin existed. And for us, it's super interesting, the opportunity to actually tokenize financial assets on top of the blockchain. And it seems Stellar was really built for that sort of original vision of tokenizing the fiat currencies and enabling them to just run faster on the internet. So we'll be very excited to work together with Jed and the Stellar team on that.
It's been another tough week with the regulators. This time it was the SEC that went on a rampage and issued as many as 180 subpoenas, supposedly including one to TZERO, the new exchange for blockchain securities. We're trying to get someone from TZERO on the line, but before we do, let's talk to our securities token expert. Anthony Pompliano, you're a big believer in securities token, and you published a blog that, in my opinion, serves as the cornerstone for the next financial evolution. So what are securities tokens and why are they so important?
Yeah, security token is simply a token that is subjected to security regulation, so fully compliant. And I think it's important because it's going to be the intersection of traditional finance and blockchain and tokens. And so if you think about what traditional securities are, those are public and private equities, debt, real estate, etc. And so when you bring in the advantages of the tokens, I think that we're going to see a financial world that looks very much improved from the world that we currently live in today.
Anthony, it sounds like you're talking about a total disruption of the current financial services industry. If you're right, what are the advantages of these securities tokens and why are they better than a regular security?
Yeah, so I think that there's a number of advantages that tokens bring to traditional financial products, right? So you can start with, in terms of the issuance or listing of these securities, it's cheaper and faster, right? So when a token is done correctly, it doesn't skirt regulation or laws. It merely removes the middleman from the transaction, right? So it removes the investment bankers, et cetera. And so whenever you remove people from a process, especially a financial transaction, you're going to speed up the time in which the process can actually be executed, and you're going to reduce the fees, right? So when you start to look at the bankers, a lot of what their job is around, underwriting a deal, creating a marketing material, soliciting investment, et cetera. And so with these security tokens, you're able to market it, in a regulatory compliant way to anyone in the world with the internet connection. So I think, cheaper, faster, the first two. And then when you begin to look at the benefits of free market exposure, right? So most people would argue that majority of the assets that are currently in the public markets are free market, right? And I disagree with that in the sense of it's incredibly hard for international investors, for example, to invest in U.S. public equities, in U.S. real estate, et cetera. And so the second you begin to bring these assets into a more global scale with a larger investor base, less institutional, more retail, what ends up happening is you realize that any asset that isn't exposed to a free market is actually mispriced. And so I think what we're going to start to see is we're going to see a repricing of a lot of asset classes when they get exposed to this free global market that trades on a 24/7 basis. And then I think that the other component here is, you end up bringing a larger investor base to the table. So not only do you get kind of the pricing advantages, but when you bring a larger investor base, what ends up happening is, there's just more people are allowed to participate in the financial system. And so a lot of people will argue, well, anyone can buy a U.S. public equity, right? And my immediate response is always, unless you don't have a bank account. Right. And so if you look at a lot of people today in the world, there's just a lot of people that are cut out of the traditional financial markets and the financial system. And so I think that these tokenized securities will allow more people to have exposure to securities, across a whole basket of asset classes that it's just a net good for the financial world.
Anthony, it's so obvious to me that not anyone can buy a US listed security. For one, you may be asleep when the US stock market opens, and that's just the basic one because of time zone. Then the real fun begins. Have you ever tried to buy a US equity? You have to fill in these application forms. I tried to do it and I couldn't even get my hands onto some of these application forms. So it's not so obvious that everyone can buy a US security. Now, let's talk about fees, because you spoke about fees. You mentioned that fees would be reduced because middlemen would disappear. But surely they need to be replaced by other middlemen. Or are you saying that there are going to be no more middlemen?
I don't know if there's no middlemen. I think that their role shifts, right? So take lawyers, for example. Some people consider the middlemen. I think that most people in the tokenized security world look at them more as a service provider, right? And so as I've had conversations with folks, I think most people say, look, it's going to be less about, did they execute the contract? Did they write the contract, et cetera? I think that stuff will be taken care of by smart contracts, for example. But I think lawyers will still be needed to provide, more advisory services, right? So people will still want advice. They want to understand, is this a good deal? Is this a bad deal? What are the risks involved? Am I being compliant with the regulation? And so I don't think that, for example, the lawyers get removed. I think their role shifts. But when you look at investment bankers, for example, if your job is to prepare and solicit investment with marketing materials, I think that job's going to go away, right? And it's going to be the roles and responsibilities, they're going to be shifted to the issuer. And so will some people step in and try to fill that void and tell issuers, hey, I can help you? Of course. Right. And so will we call that an investment banker? I'm not sure. I don't think it actually matters. But I think that, today, as we see these middlemen, if on the positive for them, their job's going to look different. On the negative for them, they're going to be completely removed from the system.
Anthony, it seems so obvious. So the obvious question is, why now? Why hasn't this happened sooner? Blockchain's not new. Why now?
I think there's a couple of reasons. So one, just, a market has to mature. Right. And so I think that it's very natural in a market that's somewhat bubbly for people to rush in and kind of go for, the assets that are going to 3,000% increase in a year. Right. And so once that happens, I think people start to look around and say, hey, we need to do this within the laws and regulations because regulators are going to start cracking down on folks. And so I think that's just a natural psychological thing. And so security tokens obviously fill that void. I think two is you're now getting folks who aren't kind of the all in on crypto crowd. You're getting more traditional finance and bankers who are looking at the space and saying, hey, I understand public and private equities. I understand debt. I understand real estate. How do I take what I understand and bring it into this crypto world? And then the third thing is I think that people now are finally realizing, hey, look, if I live in a global economy and I'm somewhere else in the world, let's say outside the United States, I've always wanted to buy those assets. How do I do that? Right. And so I think that, people are coming to the table all at the same time. And there's this perfect storm of retail investors saying, I want these assets, individuals saying, I know how to get these assets now onto a free market in a regulatory compliant way. And so we're going to see this just avalanche of assets that come through tokenized security offerings that are going to hit kind of a global marketplace. There's probably a couple of milestones in there that are important. I think there's going to be an iconic real estate piece that comes online. I think that there will be a company that could go public on the NYSE or NASDAQ, and we'll shun them to kind of go public, if you will, in a tokenized world. And we'll kind of see what happens.
Anthony, we are running out of time, but what about the liquidity of these tokens? Today's security tokens are illiquid. Do you think people are going to be deterred from buying securities tokens because of the lack of liquidity?
Yeah, so I think that's the big gamble right now. So the first people out of the gate who do these tokenized security offerings are going to end up, if you use a Reg D filing, for example, in the U.S., you can't trade that asset or ownership for 12 months, right? So people are basically taking the position that in the next 12 months, there will be a couple of security exchanges that pop up that will allow people to have the liquidity. It's a gamble, right? But I think that, scared money doesn't make money. Right. And so I think you're going to see more and more people who kind of realize these exchanges are coming, and they'll go ahead and take the leap now.
Anthony, do you believe that TZERO will be the first blockchain securities exchange?
Look, I'm not in the speculation game of who's going to be first, right? I think that everything from the TZEROs, the Harbors, the Polymaths, the Templums of the world, there's a whole host of other people who are building these exchanges and protocols. I think they're all going to coexist in the same ecosystem.
And speaking of TZERO, it looks like we have managed to get someone from TZERO on the line. In fact, it looks like we've got Patrick Byrne on the line. Patrick, it looks like you've got a gun to your head, so best you be telling us the truth here. Patrick, we first heard that TZERO got a subpoena from the SEC. We then saw reports that they didn't actually get a subpoena from the SEC. So did they or didn't they get a subpoena from the SEC?
No, there was no subpoena. We do understand that I think I heard 150 subpoenas have gone out to 80 companies. We did not receive a subpoena. We got a letter requesting voluntary disclosure, which I'm very happy to provide. I used to actually have, believe it or not, a good relationship with the SEC 14 years ago. So I'd love to cooperate, and I think that it's clear that the Wall Street Journal reports that they're conducting a sweep and trying to sweep up this whole industry. I don't know if you've seen, I've actually been out there for months saying, I think this is a little sketchy, and I think that it does need the government stepping in. So I'm actually very cool with this, much more cool than you would think when you get a letter from the SEC.
Patrick, if everyone else got a subpoena, why do you think you didn't get a subpoena?
I can't speak for the SEC's mind is its own mind. I can't speak for them. But we have cooperated. I have cooperated in a number of occasions, but they are asking for a deposition under oath, which I'm fine with. I think I'm the only SEC. I was told once I'm the only CEO in history. Back in around 2004, when I was making certain claims about Wall Street, the SEC called me and said, well, and I said, guys, you don't even have to subpoena me. I'll come in any day. And they said, no, we have to subpoena you. And they subpoenaed me. I went in. I went in with no lawyer, under oath, and sat and explained all kinds of stuff to them. They said I'm the only CEO in history who ever walked in without a lawyer, went under oath, and just told them everything. Shoot, I think they got by 5 o'clock. They were like, hey, we got to go. I had a lot more stories to tell. So anyway, then the SEC and I had a rocky relationship, as you may know, between 2005 and 2008. And I said a bunch of nasty things about them. They said some nasty things about me. But 2008 came, and I backed out thinking everything's going to take its course. My impression through these few years of dealing with the blockchain stuff is it's a new SEC, more professional, and not evidently beholden to the interests of Wall Street, but actually a lot of people who want to do their jobs of having a good capital market and actually see the opportunity in blockchain.
Patrick, for the sake of clarity, the TZERO token that you guys are launching, is that a securities token or is that a utility token?
That's a security token. It's a pure security token.
Patrick, you're launching a securities token for the first securities exchange in the world. You're doing the impossible. You're taking on the whole of Wall Street. Surely you've got your legal basis covered.
I think I don't know. Who knows what their motivations are? I'm looking forward to helping them understand our new industry and how it can be such an improvement on the old version of a capital market. And we're a bunch, what they should be happy about is all kinds of things they are in the business of preventing, all kinds of mischief actually becomes impossible in a blockchain security. They get consolidated audit trail for free. They get all these things they're on record as wanting to get. They get it, that they're in the business of stopping or in the business of having. They get it all. They get all that for free in the blockchain market.
Now, Patrick, does this put any delays on the TZERO ICO, or are you guys all systems go?
We're all systems go. We're going forward. No, we're not slowing down. In fact, when we announced this, we announced it at the same time we announced we had crossed, I think it was $100 million of funding. We actually had 15 million of signed SAFs, and we're out of the pre-sale period. However, I want to emphasize, now that it comes up, given that there's this going on, I shouldn't be talking like too much in some ways, other than to say, public, listen to me, stay away from this ICO. Stay away from all ICOs. ICOs are incredibly dangerous. We're doing an ICO that's a security token that is being offered subject to the Reg D and Reg S exemptions. It's only available to accredited investors, and even then, accredited investors should stay away. This is a moonshot. It's very dangerous. If anyone is even considering investing, it should be with some mad money and not anything. This is the most risky business venture I've ever taken on. Maybe not that, but not the least of which I'm trying to work with Wall Street. I'm trying to put the past behind us. I grew up in the church of capital markets. It's a sacred thing to me, which is maybe why I freaked out a bit about what I found in the middle part of the last decade. I'm trying to do this, but it is an extraordinarily dangerous investment, and everyone should stay away.
Patrick, let's dig into this risk that you keep warning us about. We know you've set yourself an impossible target to launch the first blockchain securities exchange. You're taking on the whole of Wall Street. But why is it such a big moonshot for you? We know securities tokens are the next big thing, and we know that if anyone can do it, you can do it. So where does the risk lie?
From your lips to God's ears, man. The risk is that who are we replacing? Well, we're replacing the biggest, meanest group of badasses in the world from a financial point of view. And, certainly a decade ago, they had a bunch of their own senators and congressmen and regulators on speed dial, and they could call up and order up investigations and all kinds of things that came out that the world learned about in 2008, if you weren't living under a rock. So we know that's the enemy. Now, here I am trying to, it's kind of funny. I feel like I've got cold fusion. I'm not trying to get rich anymore. I got enough. I'm trying to share this with the world. But there are people who are so ticked off at me on Wall Street. Oh, people have told me, Patrick, we really can't get involved in this until you own 80%. I can't be a junior partner to Patrick Byrne. You got to get your ownership down and we'll come in and stuff. So there's this lingering resentment of what happened, a decade ago. I kind of thought, given what happened in 2008, everybody would remember, given the fact I didn't draw first blood, they drew first blood, that people would sort of get over what happened between us 14 years ago, 13 years ago. I'm over it. I've grown up. But there's I've got some enemies out there. On the other hand, I think it's a better mousetrap. Other problems are, you saw Goldman's group Circle, that's their pony in the race, bought Poloniex last week, and they're saying they're going to do stuff. And there's a group in Canada who wants to do this. We think we have a great team. Oh my gosh, the team we have in New York. I mean, I could go on and on about our advantages. We got this team, Joe Camarata, Speed Route, at the core of it. We built this. We bought a node of Wall Street where 2.5% of the daily volume of Wall Street goes through. It's Joe Camarata, this great entrepreneur, Speed Route. And we built blockchain up around that. And we're creating these blockchain products. But it's all integrated into the national market system. In fact, we hope it can be kind of the bridge between the national market system, which speaks fix to itself, and this whole world of crypto.
Patrick, we are running out of time, but before I let you go, what do you feel is the biggest risk? Is it the risk that you're not going to be able to deliver technologically, or is it the risk that the regulators will get in your way?
I guess I was going through my advantages. Anyway, we have these advantages. We do have big risks. I guess the biggest one, I don't have any risk on the technology. There's always a risk. There's no such thing as failure is not an option. Anyone who ever says that is dumb. Don't listen to them. Failure is always an option. It's always a problem. But I worry much less. I'm very confident that between the technologists that we have in TZERO at Wall Street and the technologists in Utah, we can build great technology. My concern is the regulators. My concern is, are we living in a world like we were 2005, 2006? We spent 998 days on the reg show threshold list, a list that you're not supposed to be able to be on for more than 3 days, because of how the SEC felt about me and such. But I think it's a better SEC. I am worried that you have some serious players on Wall Street. If they still have juice with the SEC, like John Mack did, as a court record showed, as an internal investigation at the SEC later turned up, if they still have juice, then we will have sticks stuck in our spokes, that they will try to slow us down and either keep it from ever going live or slow us down long enough until Goldman's entrance and Morgan Stanley's entrant and everybody else's entrant is in the market, and they'll slow us and the whole world of crypto down.
In my ICO pick of the week, I go to a little town in India where a small, humble team have been working their way to solve one of India's biggest problems. They found the solution on the blockchain. Unlike most other ICOs, these guys aren't raising a ton of money. They actually have a product that's working, and they have the government of India as a client. Babu Munangala is the founder and CEO of Zebi. Babu, who are you guys and what is Zebi?
Okay, let me introduce myself a little bit, okay? I did a BTech in IIT Madras back in '93 and spent most of my 20 plus years career in United States, San Francisco Bay Area, Silicon Valley, experienced in databases, middleware applications. We started Zebi in early 2015 as a big data company. How do we create value? How do we protect big data? And we really realized, very quickly by, middle or end of 2015 that data security is a huge problem, and there's no real solution around it. And that's when we came across blockchain as really an accident, because there is no other solution that can really give us the type of immutability, a 100% protection that no human can override. Because data is such a fluid asset that even the insiders, can easily tamper or steal the data.
Storing data in an immutable format on the blockchain sounds fascinating, but give me a practical use case of where we would want to protect data.
There are many use cases, and the way we built our platform, it's data model agnostic. It's completely, NoSQL type of key value pairs. It doesn't know the data model. It can be used for land records. It can be used for education records. It can be used for employment records, various use cases. But obviously, land records is a very, very important use case. And just in India alone, more than 70% of all the pending court disputes, there are a lot of pending court cases. There is confusion about, two people fighting over, some particular issue. And more than 70% of their disputes, they're because of property ownership. Who owns this property? And they go to the court and, they keep pending forever and forever, right? That's really because the data is not properly stored and it's not properly protected.
Babu, you're not telling me that in places like the Land Deeds Office, where there's highly valuable and sensitive data, that there are people that are dishonestly changing these records? Really?
Absolutely, yeah. And if you look at the evolution of the digital age, it's actually more difficult to tamper or steal data when it's in papers. Imagine, stealing a big bunch of papers equivalent to 1 GB of data. It's very difficult and cumbersome, right? But once it's digitized, it's all so easily, efficiently put in, very compact. All you have to do is, steal a small, take a small, USB drive that can hold a terabyte of data, or, have a very intelligent software that can manipulate the data without leaving any trace. And that's where blockchain can play a huge role. And that's what we did, in the last 2 years. Created our own innovative ZEBI private blockchain. We already have a patent filed. 2 patents are in progress. And the beautiful thing is there is already a live customer. Government of Andhra Pradesh, that's one of the biggest states in India. They're using it to protect their land records.
So let me be more blunt. Are you saying that in India, because land records and other records are centralized, they can be easily manipulated? Now, sprinkle a bit of corruption onto that, and you're sure to get duplicated records, double records, and records moving around from person to person.
So as the countries are trying to digitize more, the problem is actually going to get worse unless they have a 100% tamper-proof, 100% immutable solution that can only be done by blockchain.
So into the blockchain, and the problem solved. But how does the government respond to taking these centers that have been centralized and putting them onto a decentralized blockchain?
Very, very good question. Because governments don't like the public blockchains, right? Because everything is visible, everything is seen by everybody in the world. That's where our innovation comes in. So we created a ZEBI private blockchain where all of their private data that's sitting safe within the private blockchain. Obviously, the private blockchain has multiple nodes. It's distributed geographically. The control is distributed. There is one node at an NGO. There is one node at ZEBI. There is one node at the actual land records office, right? So the control is really distributed. And then there is a Ethereum public chain integration. So what's stored in the Ethereum is a hash, right? Not all the private information that the government wants to protect and keep it really inside their offices.
So you're eliminating corruption using the blockchain. And corruption is a worldwide problem. It's certainly not limited to India. In fact, if you came here to Africa, our ex-president and his Guptas would probably shock you a little bit. Do you have any plans to bring this to Africa or take it to the rest of the world?
We did not have, if you asked me in December, I would have said no. We don't have a marketing team in any other country. And even now, we don't have a marketing team in India. We're building that. And we have been so focused on India, but we're fortunate to get incoming calls from multiple countries, right? Australia, US, Bangladesh, and Africa. There are multiple consultants that are willing to take our technology just because it's so new, it's so innovative, and there is no immediate competition in the comprehensive way that we solve both the data protection and data use, use cases.
Babu, am I right to say that you can apply the same software or the same techniques for any type of data record, be it a hospital file or an education file or a police case file, it's the same software.
Absolutely, absolutely. Same software. And the same problem exists, right? Again, once you throw away all the paper records, if the only source of truth is your digital records, how are you sure that it's not tampered? How are you sure that it's not stolen?
Wow, it sounds like this could be huge. So why are you only raising $10 million?
Again, just because we thought we'll focus only on India, and that's $10 million is reasonable for an Indian market, to execute and to spend for the next 3 years, and we will be profitable after 3 years in India alone.
Babu, if our viewers want more information, where can they go?
Zebi.io.
So it looks like my call here was right, and these guys sold out the ICO in 4 minutes. That's all we have time for here tonight. Next week, we are coming to you from San Francisco, where we'll be at Token Fest, which promises to be one of the best conferences of the year. This time, you can join us at Token Fest because I'm giving away 5 tickets to 5 lucky viewers valued at over $1,000 each. To enter, all you have to do is go to my Twitter at CryptoManRun and tweet with the hashtag #TakeMeToTokenFest. I'll see you next week in San Francisco. Until then, trade well, my friends.
Cryptotader is proudly brought to you by Element, a full-service investment bank for the digital token capital markets.
If you like this show and you think that we should bring you more of this type of information, hit the subscribe button now.